All right. Welcome, everybody. My name is Advent, and I am not a financial advisor. Anything that we go over in this class or any of my content or future content is not financial advice. It is strictly for educational purposes only. I am also not a tax professional. So if there are any tax-related questions in regard to this, I can only give you my experience. I cannot tell you what to do or what to expect. You need to consult your tax professional or accountant. Also, during the presentation, if you guys want to ask any questions, you can type it in the chat. Don't come off mute until the very, very end. That way we can keep the recording smooth and clean. And for the questions to ask, I'm going to open it up at the very end. But as we go through the material, let's just keep it tied to the specific topic that we're on. After I go through each topic, I'll ask you guys if you want me to clear that up or if you have any questions regarding that. But towards the very, very end, when we're done, then you can ask me a lot more questions overall and, trading related, whatever question that you may have. Everybody on board, on the same page? Cool. All right, let's get started. So we're pretty much going to be going to, yeah, great thing to say. Write down your questions for the end so you don't forget them. We're going to be going over a beginner's guide essentially to trading. I'm going to be going over many different components. This is going to be the table of contents that we're going to go over today. What is trading, the market participants, risk management, types of trading, fundamental and technical analysis, types of accounts, cash versus margin accounts, choosing a trading platform, creating a trading system, candle anatomy, candle types, patterns, market structure, some trading terms that are good to know, order types, and what they may be used for, as well as some resources for ongoing learning. One thing to note as well is I'm not going to go incredibly deep because there are many topics today. And if we go over all of them in extreme detail, we might be here for 4 hours. So I want to respect everybody's Sunday. And we'll probably be here maybe an hour and a half, maybe 2 hours, depending on the questions and how many questions you guys ask. So when we're done with the main presentation, I'll open it up at the very end. And, we can hang out for an extra half an hour just answering questions and things like that. So let's get into it. This is a disclaimer. Like I mentioned earlier, I'm not a financial advisor. None of this is financial advice or a tax professional. So please consult any of those professionals if you want professional advice. I'm simply giving you my ideas and my experience. If you agree with all of this, stay on, continue watching. If you do not, you can exit the stream now. Cool. So what is trading? Trading is essentially the buying of financial assets that can be, stocks, bonds, currencies, commodities, so on and so forth, with the goal of essentially making money, which is why everybody's here. So, as a trader, what you're really going to be looking for is to take advantage of the price fluctuations when price goes up or when price goes down to make money. Now, if you want to make money when the stock or whatever the trading goes up, you're essentially going to be buying at whatever price you're buying it at, and then you're going to be selling it higher if it goes higher. And if you're going to be making money when the instrument goes down, you'll be short selling. I'm not going to go too deep into short selling right now. It's not going to make too much sense, especially if you're new to trading. But essentially with trading, what's great about it is that you can make money when things go up and when they go down. When I started, I thought I can only make money when things go up, which is fantastic. Also, try not to draw anything on the chart, please. Thanks. Cool. And it comes in different ways that you can trade the markets, whether that's day trading, that can be anywhere from holding a trade from a few seconds to a few minutes or hours, so on and so forth, or swing trading. Let's say if you want to buy today and you want to sell tomorrow or in a week from now, or even I believe it's called the position trader, where they'll buy and wait like months or years for a different position to settle down or close. Any questions here before we continue? Pretty straightforward. Basically just buying something and you're selling it for something more. Same thing with any type of trading. For those who may be into the reselling business, you buy it cheap, you sell it more expensive. Cool. So market participants, there are different types of market participants, such as a retail trader. A retail trader is essentially you and I, like an everyday person who is just trading for themselves. They don't work for a firm, and they don't have like any advisor that's trading for them. They're just, a regular individual. There are institutional investors. I'm sure some of you may have heard like Citadel and things like that. Those type of big firms, Vanguard, so on and so forth, institutional investors, hedge funds, so on and so forth, and market makers. A retail trader, as I just mentioned, is essentially somebody like you and I. We're just trading our own personal accounts. Pretty straightforward. An institutional trader is a professional who works for a larger organization, such as a bank, hedge fund, mutual fund, pension fund, insurance company, so on and so forth. These individuals handle an incredibly large amount of capital compared to you and I. We might think $1,000 or $10,000 is a lot of money putting into position, but they might put millions of dollars into a positions or even more. Now, a market maker is essentially an individual or a firm that is providing liquidity to the market by buying and selling financial instructions, or it might be a typo that they got to fix up later, financial assets at publicly quoted prices. So they're essentially making sure that the market is liquid and that there's always a buyer and a seller for a transaction. Moving on. Risk management, very, 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 very important. Risk management essentially refers to the process of identifying and assessing and controlling the risks associated with trading to protect your money or your capital and avoid significant losses. As always, I always tell people this, nothing is guaranteed. Even my best setups fail. Nothing is ever 100% in trading. If any of you ever find somebody who's 100%, please send them my way because I would want to learn from them. Everything trading related is based on probability. So even if you think it's 100%, it's not. I'll tell you guys a story that I love to share. And this might not make sense for newcomers, but I'll try to make it simple enough. So this individual opened up a short trade, which means they were short the trade instead of long the trade. So they sold something, and when you're short, your losses are infinite. Now, the system told him that it has a 1% chance of not working out in his favor. So he shorted that position to collect $9,000, and he went into a meeting with no stop loss, which we'll go over later. And because he was confident that the position wouldn't go against him, he went to his meeting without a stop loss. He came back 20 minutes later and he was down $1 million because the market tanked, which is not good for the specific position that he had. And he was negative $1 million in the hole. And I don't think he's trading anymore. As always, some little notes here. If you want more explanations of risk management, on my YouTube channel, there is a full-length class that I had on risk management, about an hour, hour and a half. So definitely check that out. And also in my course, I have that information down there. And I have the websites linked right over here. Types of trading. So there are different types of trading, which include day trading, as I mentioned a little bit earlier, swing trading, position trading, and scalping. Day trading is essentially the buying and selling of different instruments, whether it's stocks, futures, and options within the same day or multiple times throughout the day. Swing trading is essentially holding a position or trade overnight. It could even be one day to the next, several days, several weeks, several months, etc. Position trading, similar to swing trading, is held for a minimum of weeks, months, or years. I would fall into the category of a day trader and a swing trader. I do both. Scalping, while I wouldn't consider myself one, some of my trades, they do pretty much hit targets within a short amount of time, about 10 minutes or less, which I guess some people would consider scalping. I don't believe I am one, but you know, the numbers might say differently. So, like I mentioned earlier, before we started recording the class, for those who may potentially have a busier schedule, if you may not be able to work from home, or if you have like a labor intensive job where you can't be on your phone or things like that, then you might want to look into swing trading, or you might want to look into trading during specific times of the day when you are available. Something to note, like if you want to trade options, you can only trade options from 9:30 a.m. Eastern time to 4 p.m. Eastern time. There are some extra instruments that you can trade 15 minutes after the market closes, but I'm not going to go into that today. If you want extra time that you can't trade during the New York session, which is 9:30 a.m. to 4 p.m. Eastern, futures, Forex, things like that, those instruments are open 23/6. So from 6 p.m. Eastern to 5 p.m. So you can trade in the morning, afternoon, middle of the day, basically whenever you want, sort of. Now, as always, as a beginner, you really want to start with swing trading as it's usually recommended. That way you can have a better understanding of how the markets work and you can develop yourself as a trader. It's a little easier than swing trading because swing trading, you're gonna have to be actively on the chart. And swing trading is a skill in and of itself outside of trading. So I started off as a swing trader and then I got into day trading down the line. So if you are new to trading, people usually go the route of swing trading first, just because it's a little slower paced. It's not too much information to digest in the beginning. And then you can slowly go into day trading. Fundamental and technical analysis. Now, depending what type of trader you want to be or investor, you might want to look at one or the other or even both. For me, I like to look at both, depending what I'm doing. So technical analysis, TA for short, and you'll see that term a lot during your trading career, and fundamental analysis are the two main methods to evaluate financial assets, such as stocks, Forex, commodities, so on and so forth, in order to make informed decisions or investment decisions. If you get into a trade based on what you think without having any proper information, I would consider you a gambler and not trading. If you do want to gamble, the casinos are on the corner. So technical analysis is essentially the study of past price movements and market data to forecast future price movements. This relies on chart patterns, price action, and reading historical data to make predictions on where the market might move next. So essentially, as I always tell people, the market is not random, it's programmed. There's millions of computers and algorithms that are controlling the market. Your job is essentially just to identify the algorithm and trade with it so you can follow along and make your money. Fundamental analysis, as I mentioned shortly earlier, is pretty much a study of economic, financial, and qualitative data to determine intrinsic value of an asset. The goal is to determine whether the asset is undervalued or overvalued and predicts its future price movement based on these factors. So I'll give you guys an example. Would anybody here consider Apple a good investment? Yes or no? And you're more than welcome to put in the chat as well. Why would you think that Apple is a good investment? Good market cap, long-term gain, consistent growth. Cool. So with Apple, you guys have just labeled some fundamental aspects of Apple. Consistently, Apple continues to grow as a company. Like Anissa mentioned, more than half of the world owns Apple products. So you can see that the company is really good. They make a lot of money. They consistently grow. So fundamentally, Apple may be a good company to invest in, not financial advice. So there we have an example of fundamental analysis. Now, something to mention for fundamental analysis, every time there's a quarter, you'll probably hear like the term like, Apple release its earnings or whatever company you're looking at. You can look at their data, how much money how much their revenue is, their expenses, if they're making money, if they're losing money. All of that is public that you can look up on the company. When I used to trade penny stocks, we mainly just traded them based off fundamental analysis. So we would spend like hours reading these long filings to see exactly how much money they had on hand, how much money they were making, what projects they were in, so on and so forth for potential catalysts down the line. Cool. Moving forward. Types of accounts. These are just the more common ones that I get asked, which I'll just go over with you guys shortly. Again, depending on what you are looking to accomplish when it comes to trading, there's many, many, many other types of accounts than these. These are just the most common ones that I tend to get asked about. So an individual brokerage is usually the most common account. In this account, the investor can basically purchase most products, like mutual funds, stocks, bonds, ETFs. You can trade futures, so on and so forth in these types of accounts. Some benefits that that are included in this, like I mentioned earlier, you can trade a wide variety of assets and you can manage your portfolio as you basically want. Nobody else is controlling it for you. There's no income restrictions, which we'll mention in a little bit for retirement accounts. And there are no income or contribution limits. So you can put as much as you want into the account. You can take as much as you want whenever you want. Another thing is, of course, capital gains. Whenever you make profit, you'll make money, dividend income, potential interest income, depending what you're invested in. Just keep in mind that for individual brokerage accounts, everything is taxed in there. If you make money on a trade, that's going to be taxed when you file your taxes, dividend income, interest income, so on and so forth. Custodial accounts, usually I get this question from parents or any students of mine who may be parents. A custodial account is essentially just a type of account that you can set up for your child, for another child. I had my aunt reach out to me the other day that she wants to open up an account for their granddaughter or one of those. I think granddaughter. Yeah, I think it was the granddaughter. Anyway, so with these accounts, you can start putting money into these accounts for a minor, just so they can start getting something when they become of age. They have some money there set aside that you've left them. Some benefits, educational opportunity. The custodial account can help teach children about investing in money management, which is always great. I wish I was taught this when I was younger. I literally discovered all of this 4 years ago, or about 5 years ago. And one of my brothers has been doing this for the last like 25, maybe 30 years. Never told me. And I really wish he did. Gift and tax benefits. Contributions to the account are considered gifts, and there are annual gift tax exclusions. Additionally, investment earnings may be taxed at the minor's lower rate, which can reduce tax liabilities. As always, please consult a tax professional. I am not a tax professional, and this is not tax advice. And essentially, you as a custodian, you can control the funds until the child becomes of age or until they get control of the account. So any parents out there, you may want to potentially look into these. These two accounts are more so retirement accounts. Again, there are a lot more retirement accounts. Like if you work at a company and they offer you a 401k, that's a type of retirement account. Starting on the left side, a traditional IRA is a retirement account that allows individuals to contribute pre-tax income, which can grow tax deferred until withdrawal in retirement. Contribution may be tax deductible in the year they are made, depending on income and participation in an employer-sponsored retirement plan. Benefits, tax-deferred growth. So anything that's in a traditional or Roth IRA, whatever money you make, whatever interest or just in general, whatever money you make in the account and whatever growth happens, you are not taxed on it compared to an individual account. Let's say for the sake of the conversation, if I made $1,000 profit in my individual account, when I go to file taxes, I'm gonna have to pay capital gains tax on those gains because it's a taxable account. However, in a retirement account, I don't pay any tax on that. So if I made $1,000, I don't get taxed at all. So with traditional IRAs, something to note is that when you become the age of retirement, 59 and a half, and you take the money out, that's when you're taxed for traditional IRAs. You are taxed after you take the money out. So whatever you grow, so let's say you're 30 years old now and you retire in 29 years, if your account went from 10,000 to 100,000, that gain that you made from that time is not taxed until you take the money out. Not the full amount, but the amount that you take out, because it's treated as ordinary income for whatever amount you take out. Now, a Roth IRA, people usually like Roths better, and I'll explain some things that you might want to consider. I personally have both opened, and I'll explain why in a few moments. A Roth IRA, similar to a traditional IRA, you contribute after tax income. So any money similar to a traditional IRA, any money that you make in there is not taxed. It's all tax free. And when you become of the retirement age and you take that money out, it's also tax free because you're contributing after tax income. So that money is already taxed. So when you take it out, to whatever it grows, you get all of that tax free. Now, if you withdraw that money before 59 and a half, depending if it's like any gains that you made on the contributions, that may be subject to a penalty and a tax penalty. So just, go to the IRS website. They have all of the information there regarding these accounts and what you can expect. Cool. And you guys can pause the recording when you go over this and just to see more details on the benefits that are there in the IRS website, different platforms. So like whatever platforms you have your trading account with, they'll also give you a ton of information here. One thing to note for Roth IRAs, you can only contribute to them based on your income. So there are income limits. So if you make a lot of money, you cannot contribute to a Roth IRA. You can only contribute to a traditional IRA. But there are things that individuals can do, like a Roth conversion and things like that to kind of get over the income limit. So again, as always, please do your research before you decide on which account you want to open. I have multiple accounts. I have an individual account. I have a traditional IRA and a Roth IRA. Cool. I wasn't gonna add this, but I added it today last minute because I always see a lot of people ask about this and they're really confused on what it means. And it has been detrimental to some individuals by having margin versus a cash account. So a cash account is essentially a margin account, or whoops, a cash account is not a margin account. Read that wrong. A cash account and a margin account are both types of brokerage accounts, but they differ in how the transactions are funded and handled. So a cash account, essentially investors must pay for securities in full using their own funds at the time of purchase. There's no borrowing. Transactions are settled with the cash that's available in your account. So if I only have $50 and I want to buy a stock that's $100, I can't do that because I don't have enough money to purchase that. This may be a simpler and lower risk option since you can only invest with the money that you have. Now, margin, on the other hand, is a an account that allows investors to borrow money from the brokerage firm, and it essentially allows them to purchase securities using that, using their existing investments as collateral with the money that they're borrowing from the firm. The leverage can amplify gains, but as always, if you're going to make more money because your position size is bigger, it can also increase your losses and your risk. So definitely always keep that in mind. Margin accounts also allow an individual to short sell. So I'm sure a lot of people heard the term during the GameStop stuff. They were short selling GameStop and all these other things. You need a margin account for that. A key difference, just to sum it up, the primary difference is that in the cash account, you pay for securities entirely with your own funds, while in the margin account, you borrow funds to buy more securities than you could with your available cash, increasing both potential risks and returns. Something to note with margin accounts, if you are under $25,000, you are subject to the pattern day trader rule or PDT rule. You will be flagged as a pattern day trader if you execute 4 or more trades within a 5-day period. So I always see people saying, oh man, I can't take another trade because if not, they're going to mark me off as PDT. Or I had to hold the trade overnight because I'm flagged as PDT and I can't close it the same day. Or I run the risk of being flagged PDT. So realistically speaking, if you don't have $25,000 in an account, you have no business having a margin account. And I often get people ask me, what's margin? If you don't know what margin is, when you're applying for the account, you do not hit yes, enable margin. So cash accounts are perfectly fine. Let's move on. Choosing a trading platform. So a trading platform will essentially allow you to trade electronically. There are many different platforms aside from the ones that I have listed here. Some popular ones, Thinkorswim. You have to make an account with Schwab to do that. Webull, Robinhood, MetaTrader if you trade Forex, Tradeovate and NinjaTrader for futures, and so on and so forth. Like I mentioned, there are a lot of different platforms. Fidelity is another one, Vanguard. Really just use whatever you prefer. And depending what asset classes you are trading, like options, stocks, futures, etc., you need to choose a platform that supports them. For example, Thinkorswim supports stocks, options, futures, Forex, things like that. So just do your research on what you want to trade or what you may want to trade down the line, and you can choose it. Now you can have accounts with multiple platforms. I used to use Webull. I mainly use Thinkorswim now and Tradeovate for futures. But essentially, you can have multiple accounts open up in different places. Really doesn't matter. And a little note in the very bottom, when when you choose whichever platform you want, on my YouTube channel in the trainings and walkthrough playlist, I have a guide on how to set these platforms up. So if you choose Thinkorswim or Webull, Tradeovate, TradingView, etc., you can go to my YouTube channel in that playlist, and I have a video for each platform to help you set it up. Another thing to mention is that when you are starting out as a brand new trader, or even just in general as you're learning, it's usually recommended to open up a demo or paper trading account so you can use fake money or virtual money to trade the live markets. So in that case, you're not losing your real money as you're learning, right? Like for me, when I first started, my first trade was a winning one. And I'm like, oh, this is easy. I put $400 more in the account. I lost half of that because I thought I knew what I was doing. So I always emphasize paper trade and demo until you know what you're doing, because it can go south really fast. I've heard many horror stories, and I'd rather that not happen to you guys. I've had an individual come to me brand new to trading, didn't know what they were doing, shredded $5,000 in 2 weeks. You don't want to do that. Cool. Moving on forward, creating your trading system. This is Very, very, very important. To have a profitable outcome in trading, it is important that you develop your trading system. And as you continue trading and learning more of it, it will make more sense as you continue down the line. This will consist of, but is not limited to, of course, having an edge or a profitable and consistent trading strategy, journaling, and collecting information from all of your trades. Having a list of rules, a solid risk management strategy to stay in the business of trading. You don't want to blow your account, and studying up on trading psychology. I will provide you in a few moments a sample of my trading system that you guys can take note of. And as always, for a full breakdown of creating your system, you're more than welcome to get my Essentials to Trading course, which I'll mention later on. I also have some information on that on my YouTube channel, and so on and so forth. This little infographic, the image right here, kind of gives you the learning process. When you're first starting, you're learning trading, price action, risk management. And then once you have all these things down, you think you're ready. And then what happens? Trading psychology is next, and your system. Don't underestimate trading psychology. In the beginning, it may not make a lot of sense, but trading will bring about you sides of yourself that you may not have known existed. And it's going to bring about a lot of challenges that you may need to overcome in yourself. But on the bright side, when you do overcome those things, you'll be making money. So, and it'll make you a better person too. So this is my trading system that you guys are more than welcome to use as reference when you're creating yours. I have a morning routine that I must complete before I start trading. If any of this is not completed, I can't trade until I do. This is a non-negotiable. Remember, you want to treat this as a business and you want to take it seriously. As one of my mentors always tells me, if you have poor results, or sorry, if you have poor habits or poor practices, you're going to get poor results. So if you want good results or good outcomes, you need to have good habits and take this seriously. Trading rules, essentially, rules are really going to be unique to yourself. These are just mine specifically. So for example, when I first started trading, I would trade in bed, which was horrible because I'll literally wake up half awake and I'll place a trade and I'll lose money and I'll be like, all right, why am I not making money? What's going on? So it's very, very important that you start creating your rules, and you'll learn more about what rules you need for yourself as you continue to develop. I'm not going to go through all of them, but you can pause the recording later on and you can use this as a guide. My risk management guidelines when I'm trading options and futures. My playbook. A playbook is essentially a collection of setups or trade setups that you look for. These are my specific ones here. Again, if you are new to trading, this is not going to make sense to you. Don't worry about it. There's a little more down the line as you develop yourself as a trader. And then little notes there that I like to have for myself. Let's move forward. Candle anatomy. We're gonna go in. Actually, before I go into this, do you guys have any questions over what we've gone over so far? You can put the questions in the chat and I'll answer them, since we're going to be going over reading candles and charts. Why do people not like Robinhood? Great question. The features are not as advanced as other ones. I think they just released like something called Robinhood Legend, which is like their like proper trading platform. But even then, there are better alternatives in my opinion. Robinhood is easy, like the interface is really easy to use compared to other ones, which is why people like it. But realistically, if you do want a simple layout, you can look into Webull. Has a pretty straightforward interface and really easy to use for beginners. Thinkorswim is a little more challenging in the beginning, but it's really an amazing platform. I love it. E-Trade. E-Trade, I have not used personally, Sarah, so I can't necessarily speak on it. I've only ever used Webull, Thinkorswim, Robinhood, like when I first started trading. Tradeovate for futures, Coinbase for crypto and crypto futures, and some other ones. Can this apply to trading crypto? What specifically, Ankur? If what can apply to trading crypto? Yeah, TradeStation is another good one. Well, yeah, Ankur. So crypto, anything that has a chart, you will be reading charts for it. So as long as there's a candle, you can use that for crypto, anything, anything that can be traded. Will I go over the strat by Rob Smith in this class? No, Jonathan, I will not be going over that. If you go to my YouTube, I have an entire playlist that goes over the strat in detail. So you can consult that for the strat information. Robinhood is very easy to me to use, but in the future, I think I'm gonna use Webull. Yeah, Flip, Webull is very, very simple to use. I love the interface. I'm a sucker for clean interfaces, so I definitely love it. TradingView is really good too. I use that as well to chart as well when depending what I'm doing. You don't know how to read it that well. Flip, you're more than welcome to go on my YouTube channel as well in the training and walkthrough playlist. I have a full video on how to set up and use TradingView. So you can check that out. All right, let's keep it going. Candle anatomy. So when it comes to reading charts, you want to understand how to read candles, what they mean, what they represent, so on and so forth. So a bullish candle is essentially a buyer's candle. We have a wick, which is this line here. This green area is the body of the candle. And then there's the wick on the bottom. So there's an upper wick, which is the high of the range. This solid area here is the body of the candle. And then the lower wick is just the lower range. It's letting us know where price was going and like, what happened during that candle being open before it closed. To keep it super simple, if a candle is green or if it's bullish, the closing price of the candle is above the opening price. And then vice versa for a bearish candle or a seller's candle means there was more selling during this candle. Price is going down. If a candle is red, that means that the opening price or the closing price is below the opening price. So basically, a opposite of the bullish or buyer's candle. Candle types. There are many other candle types than these. I just want to give you guys basic ones just to get a understanding of it. A hammer candle, you may know this as a bullish pin bar, is a candle that can be bullish. This candle type can be a bullish reversal signal if it prints near or at the bottom of a downtrend. It can also print at the top of an uptrend for a potential continued move to the upside. A reverse hammer candle or a shooter candle or bearish pin bar pretty much is the opposite of a hammer candle. It's a candle type that can be a bearish reversal signal if it prints near or at the top of an uptrend. Essentially, what these candles are letting us know is that there's a lot of buyers present here and there's a lot of sellers present here. So the last candle is going to be a doji candle. A doji candle is essentially a candle type that lets us know that buyers and sellers are a little undecided on where they want to take price. It can be a potential reversal signal if it prints at the top or the bottom of a trend. and I'll show you guys some examples if we have time later on. Pretty straightforward. A hammer candle. Basically, it's named that because it looks like a hammer. You have the handle, and then you have the part of the hammer, right? And then the one on the opposite side. A doji candle. Some people may call those a spinning top for those who are of the older generation. When you spin those tops, basically looks like a doji candle. Bullish candle types. There are other candle types than these that we have here. I just want to give you guys some examples. If you see a candle that's like this with no wick on the top and bottom, this is the most bullish type of candle. If a hammer candle is the second most bullish, a normal bullish candle can have a wick on the bottom and the top. A neutral, which is a doji, a neutral candle is essentially a candle that's at neutral, but it closed green as opposed to red. And then a least bullish candle is a reverse hammer or shooter that is green. Let's go to the bearish ones. So most bearish and so on and so forth, basically the same thing as a bullish candle or the bullish candle types, but just in reverse as we have here. So there are different candle patterns. There are many different types of candle patterns than these that I've mentioned. Again, these are just some examples to give you guys something to start with, some basics, so you're not trying to learn 50 million different types of patterns. So we have a hammer as we have right here. This hammer, like as I mentioned earlier, it can print at the bottom of a trend before it reverses price back up. The bullish spinning top, like I mentioned earlier, we have for the two candlestick patterns, a bullish engulfing. A bullish engulfing candle is essentially this second one right here, where it's essentially engulfing or it's overtaking the previous candle, meaning this entire candle took over this entire one. It's bigger in its entirety than the previous candle. For those who trade the strat, you'll know this candle as a 3 or scenario 3. A tweezer bottom is essentially a big red candle with another big green candle that's roughly 70 to 100% of the previous candle in the range. And then a 3+ candlestick pattern. As I mentioned, there's many more than what I have here. But again, just some examples for you guys. We have a morning star, as we have over here. So a morning star is a bullish candle pattern because it prints essentially at the bottom of a trend, as we can see here. The idea is, let's say when the sun is coming up, you get the sun rising. So you have a morning star down there, as it's essentially printing at the bottom of the horizon and can reverse price back to the upside. 3 inside up for strat users, you may know this as a 2-1-2 or even a 3-1-2 if this is a 3-bar, inside bar, and then a directional bar. And then a Momo hammer is essentially just a hammer that prints in a bullish trend. You'll see a really strong candle, a hammer, and then a really strong candle. And then basically for the bearish versions, the same thing, but in reverse. Let's keep it going. Oh no, I have a typo here. Nobody look at that. So market structure. Market structure is one of the key skills that you as a trader will be learning so you can understand and read market structure. Market structure tells us in which direction or what trend, if any, the market is in. This can range from a bullish market, bearish market, and a ranging or choppy market structure, no real direction, kind of just sideways movement going from side to side. Understanding how to read this type of price action is going to let you know who is in control of the market by observation alone without the need of any indicators. According to statistics, trends usually occur 30% of the time. It is definitely key to understand when they are happening to take full advantage of them. So generally throughout the week, maybe a little more than 30%, but you'll get at least two good trend days every week for the most part, at least the way the algorithm has been lately. You'll get two good, really good trend days. For trending markets, we want to look for higher highs and higher lows, or lower highs and lower lows. And I'll give you guys some examples in the following slides. Something to mention, a little note, to get an idea of the overall trend of the markets as a whole, you want to look at the higher time frames, such as the 4-hour time frame, the daily time frame, the weekly, monthly, quarterly, so on and so forth. For intraday trend, so if you want to see what the trend is immediately in that day, you may want to consider using the 5-minute, the 15-minute, 30-minute, 1-hour time frames. You should never look at the lower time frames to determine the overall big picture of market structure, right? I'm not going to look at the 1 minute and be like, hey, the 1 minute time frame is super bullish. We're trending up. But if you look at the monthly, we're trending down. So you always want to look at the the bigger picture, and then go to the lower time frames to potentially look for setups. Let's keep it going. So bullish market structure, we want to look out for higher highs and higher lows, showing us that the market is trending higher or moving up higher. Below is an example with a line chart with essentially we're making a higher high right over here, another higher high. So what that means is that this high is higher than the previous high. So this is a higher high. Over here, another higher high because it's higher than the previous one. And then a higher low is essentially, it's a higher low that formed before it continued in the trend. So this one right here is a higher low because this low point right here is higher than this one. And this is just a real world example with one of my charts from TradingView, where we have a higher low right here. This low, again, is higher than this one. And then this one over here is higher than the previous one, and so on and so forth for the higher highs. Something to mention for those who have my course or who are interested in it, when you get to the strategy portion of the course, the TTO or triangle layout setup is what we will be using to get into these trends with the least amount of risk. So if you don't know when to enter in on a trend, TTO is a good setup for that. Bearish market structure, pretty much the opposite. We're going to be looking for lower lows and lower highs and lower lows, showing us that the market is trending down or trending bearish. Below, as I have another example for you guys, we have a low over here and then a lower low that formed because we're trending down. And then a lower high because we had a high over here, but now we have a lower high that's printing. And then another one here. And then we're making a lower low and then a potential lower high somewhere. So for the most part, you don't really want to be going against the trend, right? I'll give you guys an example on this chart over here. What I see new traders do, or just people who may not be experienced, they like to go against the trend. They might be like, well, the market has been trending bearish or heading down so much. Let me try to catch a reversal to the upside so I can get a good entry to, go against the trend to catch the low of day or whatever that may be. So some examples here. Let's say after this big candle, we have this hammer looking candle that printed right there. And then this next candle that broke above the previous one and went bullish. So whoever's trying to time the bottom, they went bullish there only to get stopped out and have price continue lower. So unless the market structure shifts from bearish to bullish, you shouldn't necessarily be looking to get into buys going against the trend. Now, of course, there are more advanced strategies that you can use to get in earlier before the structure has shifted. A ranging market is essentially a sideways or a choppy market due to the neutral nature in where it's just moving horizontally, kind of just moving back and forth, like, ping-ponging back and forth, as we have over here, kind of just going sideways, up and down, up and down, up and down. It doesn't have any clear direction. It's not heading up. It's not heading down. It's kind of just going sideways. As we have over here, another example, as a live example, we're kind of just heading up and down in this range. We're not going down like this or up or on an upturn like a bullish one. We're kind of just hanging out sideways. As a scalper, you may love ranging markets. I personally do not excel. That's not one of my strong suits when it comes to trading. So I avoid, choppy markets or ranging markets. One thing that you can do to spot a potential choppy day is if the higher time frame is trading inside or inside the range of the previous bar, it may be a potential choppy day. So you can keep that in mind. Or if multiple bars are inside prior, in comparison to the prior ones. So if the weekly is trading inside, if the daily is trading inside, if the 4 hour is trading inside bar, then you're probably going to get a choppy day or even a choppy week. Before we continue to the next section, any questions so far on the structure and candle section? Making sense? Cool. Glad to hear. Let's keep it going. So some common trading terms. You'll see these abbreviations a lot in trading groups on the internet, so on and so forth. BMO, before market open. AMC, not the stock or the theater. After market close. In the money, out the money, and at the money. That relates more towards options. So if you're not into options, you might want to disregard that for now. HOD is high of day, so the highest point that the instrument made during the trading session. New high of day essentially is when, let's say there's a high that was created, a new high of day is essentially if price continued heading higher and made a new high of day. Pretty self-explanatory. Low of day, pretty much the opposite, the lowest point that price hit during the trading session that day, or a new low of day, like I mentioned earlier. End of day, EOD, you'll hear that a lot. Or even if you work at your job, hey, give me this report by EOD, end of day. ER is earnings reports. So an earning report is essentially just the companies letting the public know how they did on that quarter. Did they make money? Did they beat revenue expectations? Did they beat their earnings per share? Things like that. TA, as we mentioned earlier, technical analysis. FA, fundamental analysis. BE is break even. You'll hear me say that a lot during our classes and sessions. If my trade goes, if it's my first target, I'm gonna take some profit and move my other contracts to break even. Break even just means that if I buy at $1 and it goes to $2, and let's say my stop loss was at 50 cents, I'll move my stop loss to $1. So now I'm at break even. So if the price comes back against me from $2 to $1, I don't lose anything on that trade. I'm at break even, zero, neutral. SL is a stop loss. So like I mentioned with risk management earlier, as the name suggests, you're stopping the loss of whatever it is that you're trading. And I'll go over that in more detail in the order types in a few moments. Take profit, basically just when you're taking some profit or you're trimming your position. essentially you're taking some of the trade off a table. So if I have 5 shares and it's my target, I might sell 3 shares to collect some profit and then leave 2 more shares to see what the trade wants to do after that. Price action is essentially what price is telling us, what the chart is telling us. Due diligence, essentially do your research. Pre-market, PM, you'll see that people talk about that. Do your PM session, or AH, after hours market or after hour session. The bid and ask, or BA, the bid is essentially where the price that buyers want to buy something for, and the ask is what the sellers want to sell it at. So let's say for those who bought something on eBay, let's say the bid is at $50. So that's the price that the current bidders want it at. Or let's say for the buy it now price, it might be $100. That's the ask where the seller wants it. So risk reward is essentially how much you are risking for the amount of money that you could potentially make on the trade. So if I'm going to risk 100% on a trade, maybe the reward might be $200 if it works out, or 300, or 150, so on and so forth. BTO, buy to open. STC is going to be sell to close. So when I'm getting into a long position, I'm buying to open the trade. And when I'm selling it, or I want to get out of the trade, I'm selling to close. Now, BTC, not Bitcoin, but buy to close. Actually, let me go to STO first. So STO, sell to open, that's if you're like short selling something. So you're selling to open the trade, and then you're going to be buying it back to close the trade. Going long or bullish, you're speculating on the stock price to increase. If you're going short or you're bearish on something, you're speculating on the stock price to decrease. Volatility is essentially how fast a stock moves up or down, or how volatile it is. A sector is a group of stocks in the same sector. So for example, in the tech sector, you can have Apple. What are some other ones? NVIDIA will be more so like semiconductors, but we can use NVIDIA as tech as an example. Or health, you have Pfizer. What else? Moderna. Those will be in the health sector as some examples. Trim or partialing out. So like I mentioned earlier, if I have 5 contracts and it's the first target, I might trim my position or partial out and sell some of the trade's position. FOMO, which I'm sure a lot of people here have heard, is the fear of missing out. Essentially, that you may be, very excited to get into something, or you're like you want to jump in because you're afraid that it might leave you behind. Lotto, or zero, or a hero. It's essentially, as the name suggests, if you get into a trade, it's a lottery ticket. The chances of it winning are very, very low. But if it does hit, you'll win big, or you'll basically lose everything, like a lottery ticket. When you scratch it off and nothing's there, you lose what you paid for the lottery ticket. Or if you scratch something good off, you'll make money. Same concept in trading. Order types. Definitely important to understand order types, depending on what type of trades you want to be doing, so on and so forth. A market order is essentially a trade or an order type that guarantees the execution of the trade, but it does not guarantee the price that you want. It's going to fill you at the next best available price. So if I place an order to buy 100 shares of XYZ stock, it's just going to put me into the trade at the next best available price. A stop order, which you can use for a stop loss, there are also other types of trades that you can use this for, even to get into trades, but that's something else we're not going to go over. So a stop order, essentially, it's used to enter a trade when the price reaches a specified level. Once triggered, it becomes a market order. Now, you can use these as a stop loss order or as an order to get into a trade. Really depends what you're doing. If you're a strat trader, stop orders are usually what we use to get into trades. So as an example, if I buy XYZ stock at $11 and I set up a stop loss at $10, a sell order of XYZ stock is essentially it's going to get me out of the trade automatically once it hits $10. So if I'm in at $11 and I don't want to lose, so 100 shares, basically 100 times a dollar, $100. If I don't want to lose more than $100 on this trade and I put my stop loss at $10, once it hits $10 or below that, it's going to get me out of the trade automatically. So, very, very important. Use a stop loss. Don't ever go into a trade naked without one because it can go south really fast. A limit order is essentially an order that specifies a maximum price to pay or buy, or a minimum price to receive if you're selling or short selling. It'll fill you at the price entered or better. Meaning, if XYZ stock is trading at $12, I can place a trade, placing an order to buy 100 shares of the stock at the price of $11 or better. Meaning, if price is at 12 and then it comes down to my limit order, my buy limit order of $11, it's going to fill me at $11 or better. So let's say it like spiked beyond $11 and price was at 10.50, it could potentially fill me in at 10.50. So always the price you want or better. And yes, Kevin, a stop order or a stop loss order can be looked at as practicing risk management. A stop limit order is essentially the trade. It enters the trade once the specific price has been hit. After price is hit, it becomes a limit order to get you into the trade at the specified limit price or better, as I mentioned earlier. So a stop limit order is a stop order and a limit order put together. So let's say if the price of the stock is $11 and I put a buy stop limit order placed at 12, which then triggers a limit order at 11.75 once the price hits 12. So the stop limit order, the first portion of the trade is going to be the stop order. So my stop order is at 12. So if the price goes from $11 and hits $12 or more, it's going to trigger my limit order to now set the limit order at 11.75 once it hits 12 or more. So some individuals may want to potentially use this if they want to make sure that a level has been broken before they set up a limit order to get in at a specific price. These are a little more advanced orders, but I'll share it with you guys anyway, just so you're aware. One cancels the other order or an OCO order. Links two or more orders where one trade cancels the others if triggered. So for example, if I have an order to sell 100 shares of XYZ stock at $15 and cancel another order to buy, there's a typo there, my apologies, of 100 shares of XYZ stock. So if I have a sell order, if I get in, let's say at $10 and I want to sell it at $15 and I want to buy more at $9. If it hits my buy at $9, it's going to cancel the sell at $15. Or if it hits my target at $15, it's going to cancel the buy order I had at $9. So it's essentially just canceling the other order that you had. For these trades, you may also know them as a bracket order for those who've been trading for a while. So if you have a stop loss and take profit in the same order as a bracket, Once it hits one, it's going to cancel the other one. One triggers the other order or OTO order. Links two or more orders when one order triggers the execution of the other. So in order to limit buy 100 shares of XYZ stock at $15 and execute a sell limit order at 20. So if the price is at $16 and I have a buy order at 15, once it's $15, it's going to get me into the trade, and then it's going to also open up another order at $20 to sell. So if I want to buy in at 15 and I want to sell it for profit at 20, I can set that order up so it does it automatically. I don't need to babysit the trade. A trailing stop loss is a type of stop order, which is a conditional order. Actually, let me go to conditional order first, and then I'll go to trailing stop. A conditional order executes a trade based on specific criteria. The criteria may be when the stock hits a specific price, time, amount of volume, so on and so forth. So an example, in order to buy 100 shares of XYZ stock, only if the market price hits $20 or above. Meaning, if I want to buy shares of XYZ stock, but I only want to buy it if it's $20 or more, I'm going to set a conditional order to pend and wait until that has been hit. Then it's going to buy the stock for me. Or if you want to, let's say, buy a stock no matter what the price at 11 a.m., you can set up a conditional order that no matter what the price is at 11 a.m., it's going to get you into that trade, or you're going to buy the stock or sell the stock, really whatever you're trying to do. So a trading stop is a type of stop order, which is a conditional order in which it adjusts its stop price in conjunction to the underlying price. The underlying just means like the stock price or whatever it is that you're trading. For example, if XYZ stock is trading at $20, the initial trading stop price is set to 5%, which is $19. As price increases in your favor, the stop will also increase automatically as it moves in your favor. So if I go to $21, and like if I go from 20 to 21, it's going to move my stop loss from $19 to 20, and then so on and so forth until price comes back and stops you out. I don't really use these trades often like this, usually only when I'm trading futures, but otherwise I rarely use trading stops or trailing orders for the most part. So, any questions so far on this? Cool. So, how do you move a stop loss? Anabe, great question. That really depends on the platform that you're using. Some platforms you can move the stop loss directly on the chart. Some other ones you need to go into the platform and manually adjust it. I can't really answer that question fully. I'll answer it in a few moments when I bring up a chart so we can go over it together. So I can show you as an example. But for some resources for you guys for ongoing learning, the trading platforms, we have Thinkorswim, and I gave a little kind of rundown what you can trade here, so you guys can kind of get a good idea of what they offer. These the names over here are clickable, so if you click on the names, it'll take you to the website so you can sign up. Would you guys benefit from getting the slides of this class for me to send it to you? Would that be beneficial for you guys? Cool. So for whoever does want the slides, I'll mention it later on, but you can email me or message me on Discord if you know me there, and I'll give you my email and contact information in a few moments. And just send me an email and then I'll send it back to you. So with the PDF, you can click on these so you can bring up the websites and you can sign up through there. What does to trade equity mean? Yeah, equity is basically just stocks. For those who don't have a Discord, Lawrence, I'm gonna give you my email address where you can email me so I can give it back to you. So I can, forward it to you. So if you don't have Discord, don't worry about it. I'll give you my email as well. Cool. So some additional resources. You can check out Investopedia, which offers a lot of information when it comes to trading. A lot of the material that I referenced today in this class came from Investopedia and other ones. You can also look into joining trading communities, finding a mentors, reading these essential books for trading. In the PDF, you can click on this over here and it'll take you to the books that I'm referencing and really taking time to dedicate to study, whether that's through YouTube, Google, other platforms, so on and so forth, so you can accelerate your progress. As I mentioned earlier before we started recording, I do teach individuals to trade. So if you do want to work with me and take your trading skills to the next level, you're more than welcome to either book a session or get my Essentials to Trading course. Well, I'll be with you every step of the way through your trading journey until you become profitable and after the fact. And all the details will be in my WAP that is listed here. I also run a Discord group where you can connect with myself and other like-minded traders to support you as you continue to grow. And a special offer for you guys, for the people that are in here, and for those who may be watching this recording on YouTube or anywhere else, if you do want to work with me, you're more than welcome to contact me on Discord. My username is @advent_, or you can email me at ceruleanmindacademy@gmail.com, and I'll give you a special discount for, watching this video and being a part of this journey with us. Cool. So let's open it up to questions. Any questions you guys have, feel free to put it in the chat. What platforms do I recommend to paper trade? You can paper trade on Webull, Thinkorswim, TradingView. What else? There's Trade of 8. If you trade futures, I think they let you paper trade there. You can simulate the markets. So those are some that you can use. So Lawrence, just email me, or for those who are watching the recording, ceruleanmindacademy@gmail.com, and I'll send this over to you. For those who are beginners as well, the Candlestick Bible is incredibly helpful. Definitely recommend. Can you break down how to read my trades? I'm not going to go too deep into that, mainly because it may not make too much sense, but I'll give you guys one example of one of my trades. What type of information can I get from your course? What does your Discord offer? So one thing to note, my Discord is not a signals group. So if you want a signals group for me to hand feed you trades, that's not what I do. I'm here to create self-sufficient traders. So you'll have a plethora of educational material alongside support from me and the other members to help you out and to get you where you want to be. But if you are looking for a group for signals, that is not my group. I'm telling you now. There are other groups that you can look into that I can recommend if you want a signals group. What does my course offer? So let me show you guys a quick little rundown, and then we'll go back to the charts and going over some more questions. So for the course, essentially, we have a beginner section, which I'm going to be adding this video to for beginners. Section to set up your platform. It'll go over the strategy step by step and some additional things that are not found on my YouTube. The futures course. So if you want to learn futures, if you want to learn options, there's a section for that as well. A section for creating a system for trading and life success. So I'll help you out with bettering your life and helping you create your system for your trading career. And also all my setups are listed here and some other resources that you guys can look into. So essentially, I go from A to Z when it comes to the course, and I'll walk you through every step of the way, and you have my full support. Can I mess can Sarah, do you have Discord? Cool. Send me a message on Discord and just say, hey, this is Sarah, and then I'll send it to you there. Of course. This is my username, like I mentioned earlier, advent underscore or at advent underscore. That's my Discord username. So you guys can send me a friend request or just send me a direct message and we can talk there. What are my thoughts on Trade GPT? I've never used it personally, so I can't really give you my feedback on that. And yes, Sarah, TradingView only allows paper trading for crypto, stocks, and futures and Forex, not for options as far as I know. You know, Thinkorswim, Webull, things like that. Oh, whoops. Let me put that in the meeting chat. Thank you, Jay. Yeah, Jay Hernandez is one of my recent students. He's been killing it. Shout out to you, sir. You've been doing a great job. The course definitely helped him a lot. So appreciate that feedback, Jay. How often, let me pop this chat back out so I can see more messages. How often do you have these types of lives? And is there a place off of Discord we can follow when you do have live videos? Great question. Generally on my YouTube channel, I do a trade recap every second Friday. So I believe the schedule right now is either the first or third Fridays where I go over my trades and I go over everybody else's trades that they attend. It's free. It's on my YouTube channel, 7 p.m. Eastern time. These specific live classes like this, Lawrence, generally, if it's going to be a free one, I'll shout it out on my Instagram, which you can do it at Cerulean Mind Academy. And my YouTube channel is also at Cerulean Mind Academy. Let me make life super easy for you guys. So this is my YouTube channel, Cerulean Mind Academy. If you haven't already, you can subscribe. I would greatly appreciate it. And the all the classes, all the material, this specific video is going to be uploaded to my YouTube as well. It'll be in the trainings and walkthrough, so you can find that there. If you want to follow me on other social media areas, I have my Instagram linked here. My website is there for my WAP and what I and my services. If you want to work with me, but you want to talk a little more before we commit to anything, you can book a free call with me for 30 minutes and we'll talk about what your goals are, what you're looking to accomplish, and we'll see if we're a good fit for each other before you commit to changing your life with me. Trading resources, I have other things listed here on my link tree that you guys can check out. So everything is there that you can look at on my YouTube channel. Cool. Let's see. Hey, Keb. Thank you, sir. Appreciate that. Another one of my students, Kevin Carr. Uh, how long, more or less, to understand fully? So the quickest turnaround time that I've seen somebody go from zero to being able to place trades by themselves, there is one individual that was a recent student. He went from knowing nothing to basically being able to trade by himself, taking trades by himself in 3 months. Same thing for my cousin. I taught him from knowing absolutely nothing about the markets, and he was taking his own trades within 3 months, and he was making money. So if you do have proper guidance, that can speed up the process by a lot. so far. Of course, it's subjective to every individual and how much time they have to study and put time to it every day. But the quickest I've seen is 3 months. And that's with me working closely with the individuals. And as I always say, for those who work with me and whoever want to be my students, you have full access to me. So if you want to ask me a million questions, please do. That's what I'm here for. There was a question somebody asked in the beginning of the class that I want to answer. Let's see. I forgot who mentioned it. Let me see if I can find it. Is Jose, if you're still in here, he mentioned, is this something I can do part-time? And how many hours would you say I need to commit? Great question, Jose. You can definitely do this part-time. Realistically, I only trade 2.5 hours maximum a day. For those who are in one of my mentors groups or in my group, we live trade every Tuesdays and Fridays from 9:15 a.m. Eastern time to 12 noon. And some days we're done in 30 minutes if we get a really good setup. So once you really understand how to trade and do all these things, you don't need to spend more than 2 hours. In my opinion, you shouldn't trade more than 2.5 hours. It doesn't make sense to have two jobs when you can just have one for an hour or two. How much money do you recommend to start? I recommend you, well, I can't recommend anything since I'm not an advisor, but if I were in your shoes, the golden rule is never uh, invest or trade with money that you cannot afford to lose. If I were to start trading brand new, I will start with $500 to $1,000. But again, I would not use my real money until I have consistent results on paper. Because if you don't know what you're doing, you're just going to be wasting money. That's better off, buying a course or getting somebody to mentor you or studying up. Don't waste money unnecessarily. What's the cost of the class? My course is $347, one-time payment, and you get lifetime access to my group and any other material that I may update in the future, like this right now. So you guys can check that out on my website that I have right over here that I'll put in the chat, even though it's on the website, but we'll have it there anyway. Cool. All right. Can you set a stop loss or take profit after the trade is filled? Yes, Antonio, you definitely can. That really depends on what platform you're on. Some of them may not have that. Also, I have a free class, a free group coaching class every second Sunday of the month, which is the Trader Circle. Something to know, if you're going to sign up to the Trader Circle through my WAP, once you click on the link and you sign up, there's another link that is there for Calendly where you actually go into to sign up for the class. If you just sign up here, it's not going to actually put you into the class. The confirmation email when you go into Calendly and sign up through there, it's going to give you the Zoom link that we're all going to use to attend. You mentioned there was a special offer. Yes, Tevin. So for those who are interested in working with me and you want to take advantage of the special offer, either email me or send me a message on Discord and I'll send you the code, the discount code that you can use. Can you set a stop loss? Yeah. So let's look at some charts. All right, I'll give you guys a real quick crash course on reading charts. Again, I'm not going to go into too much detail since we'll be here for hours. But right now, I'm on the daily time frame, meaning each candle here is represented by a day of data. So if we look at this is Costco, the company that some of you probably have memberships for. Costco, the last closing price was $964.01. So if you want to buy one share of Costco, that's how much you're going to pay. So looking at the range of Costco on Friday, it traded at the lowest point was 958.52 and 976.30 was the high. That's the highest it made that day. And this was the lowest right over here, 958.52. And as we can see, going back to the candle anatomy that I was mentioning before, price opened up right over here. Actually, let's use an example. Let's use this camera right here as an example. So going back to what I mentioned, like in the course, right? Let's bring up this line. Let's snap that. And let's get rid of this indicator so we can see this a little cleaner. So before I pull it up, can you pull up that price course page real quick? I need to save that. Do you mean this screen? If you go to the wap.com link, Kevin, that I posted up, like two messages above yours, that link right there will take you to the same website. So you can check that out there. Of course. So before I mark it off, can you guys tell me what this point is right over here in the candle? What is this little thing called right there? What is that called? If anybody remembers from earlier, what is this called? Sweet. Yep, this is the wick. So this is a top. It's a wick in general. I'm just saying top wick because it's the wick on top. Yep, shadow, aka wick. Great job, everybody. And then this right over here is going to be the bottom wick. Not to be confused with John Wick. And if you're laughing at my corny jokes, thank you. All right, what is this area right here? This solid section. What does this represent right over here? Excellent. Yep, opening price. So this was the opening price of this candle, which is 935. That's when price opened up. And depending on the platform that you're using, if we look at TradingView, so right up here, this right here, it'll tell you the opening price, the high, the low, and the closing price. And what is this right up here, this solid portion of the candle? Sweet. Yep. Closing price. Excellent. Sweet. Look at that. You guys are doing fantastic. Rodney, the opening price is not always at the bottom. If it's a green candle, the opening price will always be at the bottom. Compared to a red candle, the opening price is up here. So if it's red, the closing price is under the opening price. If it's green, the opening price is under the closing price. Let's look at a live example with Bitcoin. And we're going to go to the 1 minute time frame because I don't want to be here for 10,000 hours looking at a 5 minute time frame. So we can see each candle here is represented by 1 minute. So this is happening right now. So you can see how the wick is increasing when price lowers from the range where it was at. So we got 10 more seconds for this candle. We'll see how it closes. All right, so we closed bullish because the closing price is above the opening price. And you can see how we're going back and forth between green and red. If the current price or closing price is under the opening price, it's going to be red. If it's above that, it's going to be green or bullish. And we can see here how the wicks are being created because price went down here, but then it came back up. So it's letting us know where price hit during that specific time frame. A quick little test for you guys. Can anybody tell me, based on the material we went over earlier, what this candle is that I'm aiming at right there? What type of candle is that? Steph, it is a hammer, but more so a reverse hammer. For those who trade the strat, you'll also know this as a shooter candle. And like Nikki mentioned, it could be a shooting star as well. Well, you can see it as that as well. Great job. Let's look at another one. How about this candle right over here? What type of candle is that? A dojo candle. He's going to teach you how to fight. But yeah, a doji candle. Great job. How about how about this one? What candle is that? Or even the one next to it? Yep, hammer candle. Great stuff. You guys are doing great. So remember what the course or what I went over earlier? When a hammer prints, it is potentially signifying a potential reversal. So we can see here that price was heading down. We printed a hammer right here, and then price reversed up. Now, I'm going to give you guys a quick little lesson on market structure to make sure we're all on the same page. All right, let me get this set up real quick. So let's put this box there. Let's put another box. Put another box there. Another box there. And we'll put a box here. And we'll put a box there. And let's get these situated. So we have higher high, higher low, lower high, and lower low. All right, so I'll give you guys a hint to make it a little easy. This is a low right over here. This box right over here, actually, let me label them by numbers so we can follow along easier. This is box one. This will be box two. This will be box three. This will be box four. And this will be box five. So what should we put in box one of these four options? Higher high, higher low, lower high, or lower low? All right, so we got higher low, lower low. The correct answer is higher low. Now, why is this a higher low? Because we have a low over here, and this low is higher than this low. What would I put? Let's just say, let me just put a box over here, and let's do a lower high. Actually, let's just label this high, so it's easy to follow. What would I put in box four? Excellent. Yep, higher high. Great stuff. And how about box two and box three? Well, what am I going to put there? Box two and three. What would I put in there? Yes, sirs and ma'ams. Higher low and higher low. And in box five, what am I putting in box five? Excellent. There you go. Look at that. You guys can read market structure. So nice little example here on just market structure really quickly. Of course, we can go over other examples, but I don't want to keep you guys for too long. Would I recommend paying for TradingView for beginners? If I were brand new to trading, I would just use the basic features first. As you start to develop yourself more and you're ready, like, to actually develop your trading plan and things like that, maybe a month or so after you start practicing, then I would potentially look into paying for it. The specific plan that I have is the plus plan right over here, because when I'm trading, I like to look at four charts at the same time, looking for my different setups on the different time frames. So all I need is four charts. So I only pay for the plus. What I would say though, because TradingView is having a discount for Black Friday, it's 50% off. So you can consider, even if you are new, just paying the discounted price just to secure the deal. So you're not paying more later on after the deal has finished. Yeah, 70% off, like Nikki mentioned. If you already have a subscription, then it's 50% off.
What are you doing, Papa?
They didn't give me the 70% off, unfortunately, that I wanted. So whoever can get 7% off, shout out to you. Enjoy that. I only got 50. I prefer personally I pay for the annual one, so I just paid one time and just save that extra money too. Just look at this as a business expense. Trading wise, like what I use for all the resources, between market data and like charting, I probably spend between $400 to $500 a year, which is nothing. You'll spend $500 on coffee in a year, right? So you can just look at this as an expense to the business of trading. I pay $180 a year for my journaling platform. I pay with this, I think it's like 180, 190, 170 to 190 I pay for TradingView. a year. And then for the data, I pay about 70 dollars or so. So everything together and some other things that I pay for about $500 a year, $400 to $500 a year. Again, it's a business expense. It is what it is. It's part of the process. You got to pay to play. And just be thankful that you're not a professional trader, like an advisor, things like that. Because if you're an advisor or you're like a professional trader that like works for a firm or things like that, or a professional subscriber, you pay like $4,000 to $5,000 a year. So I'll gladly pay 400 to 500 any day. Cool. Where would I enter a trade? Great question. Let's see if I can give you guys an example of an easy to follow trade that I took. Where are my broadening formations? All right, where was this trade? I did see one that I took already, but I want to show you guys a potentially cleaner trade if I can find it. Perfect. There we go. This is what I'm looking for. So I took this early November. These lines that you see here are broadening formations. Broadening formations are support and resistance for strat users, for people who trade the strat by Rob Smith. So remember, a hammer at the bottom of a trend is signifying a potential reversal. So once this hammer printed off this support level, as soon as the next candle broke to the upside, I went long. Excuse me. I went long or I bought, right? So my trade was something like this. As soon as this hammer printed, let me adjust this. My stop loss was 50 points or right under this candle, the hammer candle. And my max target that I was aiming for is the high of day, as we mentioned earlier. Thank you. So in this case, let's say I only have one contract, and this is for futures. I'm trading the Dow Jones futures. For one contract, every point, so every number change here. So if I got in at 558 and it goes to 580, 583, and then it goes to 584, I make $5. Not going to go too deep into that because I don't want to overwhelm you guys, especially if you're new. But essentially, for every point that this moves in my favor or goes against me, I make or lose $5. So in this case, my stop loss, as we can see here, is 50 points, which would equate to stop loss equals 50 points, which equals negative $5 times 50, which would equal negative 250 on the trade if it goes against me. My max target is 153, so 153 points. So take profit is 153 points, which would be plus $5 times 153, which would equal $765, not including commissions and fees. 765. So I'm risking $250 to make 765. So when we talked earlier about the risk reward, we can see here the risk reward ratio is 3.06. So I'm risking $250 to make 765, which is a great risk reward, right? I always aim for at least a risk reward of 1-to-1 or higher. I never want to risk $100 to make $50. That doesn't make sense, at least not to me. There are some people who excel at that. It doesn't really make sense to me, but to each their own. As long as you make money, that's all that matters. So these candles are represented by 5 minutes. So 5, 10, 15, 20. In 20 minutes, you would have made $765 with one contract. So trading can be very, very, very lucrative. And remember, this is in 20 minutes. That's one trade that you could have taken and you could have been done for the day. That's why I tell you guys, when the market wants to behave and it goes in your favor, you could be done in an hour of trading once you learn the skill. So if you really want to learn trading and you want to make this a suitable source of income or an additional side of income, then really study and commit to it. Don't take it lightly. Don't be lazy about it. Put in the proper time to do this efficiently and properly, as I always say. Cool. Any other questions that you guys have for me before we wrap up? Sweet, go for it. And you guys are more than welcome to come off mute as well. If you do want to speak and ask the question that way, whatever you prefer. Yeah, let me put that in the chat for you. Give me one sec. That is the WAP link right there, Kevin. WAP.com/Cerulean Mind Academy. How do I identify resistance and support lines? My pleasure, Kevin. Is there a way I can rewatch the Zoom call? Yes. Whoever Zoom user is, this is going to be uploaded to my YouTube channel. Yeah, there's a W, Kev, right over here. Oh, whoops, wrong tool. I got the good old Wu-Tang right over there. Good old double bottom. Speaking about double bottoms, I'll use this as an example to show um who mentioned that? Encore. How to identify support and resistance. So I'll keep the example easy for you guys. Let's say we have price moving like this. Let's say like a ranging market, right? Just as an example. Let's get a trend line. Let's draw this line up here. And let's draw another one down here. So generally, a trend line or a resistance or support is essentially where price continues to bounce in an area. So we can see that every time price hits this upper level, it keeps on getting rejected and heading back down. And every time it hits a lower level, it's bouncing off of that. So you can see this as a support level generally is identified by two or more bounces near the same area as we have here. We have 1, 2 bounces. So then I could draw a line and then we can see that it's bouncing off that area again and going back and forth. Now, something to note is that once price breaks through a resistance level, it now becomes support. Now, what does that mean? Let's say we're hanging out, going here, 1, 2, 3, comes back down, breaks through the level. Remember, on the two top points, we kept on getting rejected or sold off. So the sellers were in control until the buyers stepped up and took out all the sellers at the resistance levels. So now, instead of sellers being there, now there's other buyers at that resistance level, which turned into support. So generally, what would happen is we'll come down, we'll bounce off this area, and then head higher, or bounce off and then do something like this or come back down, go back down, things like that, whatever the market wants to do. So that's a simple way how you can identify support and resistance. For those who trade the strat, broadening formations are our support and resistance lines, where we just draw them differently, which I'm not going to go into today. What stocks am I interested in this week? Great question, Harold. Let's look at the watch list. So if you're in a group that I support, I post my watch list every single day. Uh, yeah, if you look at if you're in my group and you're in the go to daily watch list and I post my watch list every day there. And other groups that I support, I post my watch list there. Every Sunday, I post my watch list for free on Reddit and my YouTube channel. So if you go to the community tab, and I'll post it here. So this is the watch list for tomorrow, for futures and for equities. And you can expand it, and I give you guys levels that I'm looking at, and then some notes. So some targets that I may have for Tesla and other things that you can look into. So I'm looking at Oxy for a swing to the upside. That's oil. Oh, whoops. Let me switch the screen. Thank you. There you go. So on my YouTube channel, if you go to the community tab, let's go back from the beginning. So go to the community tab. We will go to, so again, every Sunday, usually by 12 noon, I'll have the watch list posted. So I'll have the watch list for the day it's for. So as a strat user, my watch list is always for the following day. Well, granted, I make the watch list for the following day since I like to have my mornings pretty relaxed. Just click on read more, and then I give you the tickers that I have and the levels on when somebody can go long or short. As always, this is not financial advice. These are just my ideas. So if you do take these trades, I'm not liable for any losses. Do your due diligence and have a trading plan, please. Cool. How do you know when and how it's going to break through? Some people, Encore, like to use like to look at volume. If there's a lot of volume that's approaching a level, it can break through that. If you have a big piece of momentum, you know, there's many different things that can tell you if a levels are going to break or not. Generally, I just focus on price action and see if we're making higher highs or higher lows and things like that, and see how price is reacting near those levels. Is it rejecting off those levels? Is it bouncing off those levels? Is it breaking through those levels completely? Things like that. Cool. I'll take questions for another 5 minutes and then we will wrap up and I'll ask you guys what your biggest takeaway was. So ask me any more questions you guys want for another 5 minutes and then we will wrap up. And remember, for those who want the slides or the PDF for the class today, just email me at ceruleanmindacademy@gmail.com or message me on Discord at advent_. Some of you already send me some emails and messages on Discord, which is fantastic. So appreciate that. And I'll get back to you guys when we're done here. Does a 347 course include one-on-ones? Yes, Marcus. So it includes one-on-one session for free plus a 15-minute follow-up, but you do get access to me basically forever. So in between one-on-ones, we can we can talk basically all day. I also live trade on Tuesdays and Fridays in my group and one of my other mentors group, the Hungries. And I also have a mentorship chat where we can all talk about the course. You can talk to other students of mine and so on and so forth. Maybe this has been answered, but what is a short or long call? I'll try to keep it simple because it can be a little difficult if you're a new trader. So a long call means that I'm buying a contract or I'm buying a call option and I make money when it goes up, when the value increases. So for example, we have a long call buying the option. So let's say you buy at 1 or 100, you sell at 2.0 or at 200. So the net profit that you made on that trade, you made $100 profit or 100% gain. Now, if you're short a call, you're selling the call. You're selling to open. This might confuse some people. Don't worry too much about it. If you're new, you'll understand it later. So I'm selling, sell or sell at 1.00 or $100. So once I sell it, I'm getting the full $100. The $100 are in my account. However, when I want to, what I want as a option seller is for the contract's price to decrease. So if I buy it back 0.50 or $50, net profit is $50. Oh, whoops, or 50% gain on the position. Now, if the contract expires on expiration date at 0, then I collect the full $100 or it's 100% gain. So if it expires and it's not in the money, then I'm collecting the full premium that I sold it. So I'm collecting the full $100. The only thing about selling premium is that your profit is limited to whatever you sold it at. When you're buying, your profit is unlimited in the sense that if it continues going higher, you will make more money. Hopefully that made sense. Let me know if it did. See, Tevin, now that is why I'm not going to go too deep into it. Uh, so how can you sell a contract that you don't have to begin with? That's where margin comes into play because I'm borrowing, right? So if I have margin, let's say, let's say to how can I make this really, really simple to understand without confusing you guys? When I have a margin account and I'm short selling, I'm borrowing that stock from somebody else. So let's say I own 0 of XYZ stock and you own 100. I'm going to sell 100 shares that I'm borrowing from you, and then I'm going to hold it. And if price goes down, I'm going to buy the shares back, essentially giving them back to you at a lower price. You're going to lose money. Well, you wouldn't lose money if you haven't sold your position, but I'm basically just buying the shares back to be back at 0 shares since I was negative 100. Now I buy 100, I'm back at 0. So now I make the difference between what I sold it at versus what I bought it at. Versus if you're long shares or if you bought shares, you make money from where you got in. And if it's above where you got in, as a short seller, I make money from where I sold. And if it's under where I am, if I'm a short seller and it's above what I paid for, I'm going to lose money. Cool. What do I like better, futures or options? Great question, Amelia. So if I were brand new to trading, I personally would have started with futures because when I first started trading, my first mentor, he got me into penny stocks and we were buying and we were short selling, right? And everybody would always tell me, hey, futures are scary, it's dangerous, it's risky, it's this and that. But what I've learned in the almost 5 years I've been trading is that anything is risky, right? Options are risky, futures are risky, trading stocks is risky. A lot of things are risky. But if you have a solid foundation and a proper risk management plan, you'll be fine because you're always going to be managing your risk, right? So once I discovered futures, I'm like, this is literally the same thing, more or less. Obviously, there's differences, but the concept is similar in that I'm just buying or I'm selling, and that's it. Compared to options, where I can either buy or sell the option, then I got to worry about the premium prices, the expiration dates, the strike prices, all these different things. Where for futures, I'm just buying or selling, and that's it. So if I would start brand new, I would start with futures. With individual brokerage, can you short a call or put? Does it need margin? Sarah, only in specific circumstances. So if you have an individual cash account, you can do a covered call. That's where you sell a call, but your shares are collateral. You're putting your shares up as collateral if your call gets exercised. Or there's a cash secured put, which you're selling the put and the cash is collateral. So that's essentially how you can sell a call or put or short a call or put using these option strategies. And you don't need a margin account for that. Cool. All right. So, my pleasure. So, thank you guys for coming out and asking your questions. It was really, really fun helping and teaching you guys and going through this material. What was everybody's biggest takeaway? What was the biggest thing that you learned today? And what is something that you're gonna take with you from this class? Put it in the chat, come off mute, share it with me with your voice, whatever you prefer. Reading charts. Nice. Definitely. And remember, as new traders, just spend 30 minutes to an hour every day looking at the charts. It's not going to make sense, but it'll make sense over time as you spend more time on it with any skill, right? When you first learn how to ride a bike, you're falling a lot. You're getting bruised up, things like that. And then once you get a hang of it, it gets a lot easier to learn how to trade and do everything else. The trading, the TradingView Black Friday sale, definitely. 100% Lindsay, risk management, very, very important. Fundamental versus technical analysis, 100%. The fact that you said this takes a few months before you start trading, also that this is a long skill to learn. 100%. Yep, trading is a skill. Once you develop the skill, nobody can ever take it from you. So if you get fired from your job, cool. While I look for another job, I'm still going to be trading, making some extra money on the side, which is fantastic. And you could do it whenever you want. You're on vacation, go trade and make some extra money. You're on vacation from your job, go trade and make some extra money. And yep, it's another way to make money outside of your regular job. 100%. Yep, definitely understanding how to read chart. Love it. Was the material easy to follow? Is there any feedback that you guys can give me? I always appreciate feedback. You're more than welcome to email it to me or message me on Discord with whatever feedback you want to provide. Hey, thanks, Sarah. Appreciate that. It was easy to follow. Love it. I do my best to really just keep trading simple. Even when I'm teaching my students, I just keep it simple because trading can be very, very complex. And I just do the best that I can to, you know, really simplify it for you guys and others. Because some people make it complicated. I'm like, this can be explained in a much easier way. One quick question. What journaling platform do I use? Great question, JP. I use Tradersync. I pay 180 a month, or not 180 a month. What am I saying? 180 a year for it. I'll put it in the chat. Where is this at? Tradersync. There we go. So you can upload all your trades. You can connect it to the trading platform so it can pool your trades and you can get data from it. It was very easy to follow. However, I still don't understand how to read your trades that you post in Divine. So Encore, for my trades, if you go to my channel and you go to the pinned section, you need to go, I think it's like in August that I made the section, or maybe even earlier than that. I give a rundown on how to understand and how to take the trades that I post. So let me go back to my browser. My watch list is based off of the strategy. So you're welcome to go to my YouTube channel or the links that I provided in the group as well. Go to the strat playlist, and I have the concepts of the strat over here. That way you have an understanding of how my watch list works and what it's based off of. I also have some of my setups that you can look at the playbook setups section with some of my go-to setups there. So you can learn a lot from my YouTube channel. If you are not able to afford me, I have a lot of material here that can get you started. So don't take it lightly and take advantage. Let's see. Cool. Yahaira, thank you for your words and thank you for your time. And thank you guys for making the commitment to joining and really taking a proper step in learning this the right way. So that is all I have for tonight. I'm gonna upload this video probably, if it finishes processing on time, it's like 2 hours and change. Probably by midnight tonight Eastern time. If not, I'll just schedule it for 12 noon Eastern time for you guys. So if you haven't already, subscribe to my YouTube. I'll greatly appreciate that. And I'll post the video on the YouTube. It's going to be in the trainings and walkthrough playlist. And it'll either be midnight tonight or 12 noon tomorrow evening. Other than that, for those who are in my group or 100K's group, the Hungries, we live trade from 9:15 a.m. to 12 noon on Tuesdays and Fridays, sometimes extra days if I'm in the mood. Anyway, thank you guys for coming out. Enjoy the rest of your Sunday, and I will talk to you guys on the internet. Have a good night. Hey, Joe Sneaker Shack. Hey, man. I'll see you there. Good night, everybody.